name's Dominique Chenard. I'm from Thunder Bay, Ontario. If any of you are familiar, that's up north a little bit. And I've been working in financial planning for about 2.5 years now. My background's as an accountant, so I used to do all that fun stuff, auditing, tax returns, and I still do tax returns to this day as part of my practice. So so I work with a combination of investment and insurance advice, basically. And I've been focusing a lot on insurance and taxes lately because it's really the main thing I could do from a distance, working virtually from home, right? I know a lot of us are stuck at home right now. And so I'm focusing on what's easy for people to do virtually, which is basically filing tax returns and applying for insurance. Noticing it's a thing that a lot of people have been putting on standby, like doing things like, we're going to talk about today is organizing all your files, updating beneficiaries. It's something that you should do, but it's just kind of a back burner thing. And
yes,
now is the time.
I hope today's call is like that push that people need. Just really quickly, I'm Liz. For everyone tuning in who doesn't know me, I run Ambitious Adulting, and all week long we're having master classes with different finance professionals to talk about different topics. I work with Canadian millennials to get them to understand basic personal finance strategies. So Dominique, when people are at home right now and they're trying to get their life in order, what are some things that they can do to start getting organized and start kind of getting their financial affairs in order?
So one starting point, and I mean, we're going to talk about wills later. A lot of us might not need a will yet, and that's okay. So don't leave this call thinking everybody should get a will right now. You might not be there yet, but at the minimum, just make a list of what you have and what you owe. Just a snapshot for yourself on a piece of paper. What do I have? I have a checking account at RBC. I'm just making this up. A checking account at RBC, savings account with Tangerine. I have my TFSA over here. I have a work RSP. I have an RSP through my work, like a group RSP. I have this. So make a list of what you have, and then make sure that you update your beneficiaries and that you have that list available. Because as weird as it is, think, well, what would happen if I passed away this morning?
Mm-hmm.
Right?
For people who don't know,
can you know where my stuff is?
No, I totally. Can you explain what a beneficiary is for someone who might not know?
Sure. So if I have, for example, a tax-free savings account, say I have $5,000 in there for some savings, I could decide who gets that $5,000 if I were to pass away. So it goes directly to a person. So for me, I put my common law spouse, I put my partner, Richard. That means if I were to pass away, it just goes directly to him. So he gets my TFSA under his name. So it doesn't have to go through a will, whether I have one or not. It just goes directly to him.
And I've actually never thought about this, but does it affect someone's contribution room, or it's just a bonus?
No.
Okay.
No, it's just basically an extra TFSA that your spouse gets. So that's if you're common law or you're married. So you can't just do that with like a short-term boyfriend, girlfriend type of thing. So
got it. Good to know.
It has to be pretty serious.
Right. I mean, if you're transferring money over to someone, it should be serious.
Yeah, exactly.
Don't just pick some guy you met on Tinder. But
exactly.
Okay, so that's good. Make a list of everything and write it down. How secure does it have to be? Because I have a list and it's not very secure. I have like all my passwords, and I just want to make it easier for everyone. If I do pass away, when I pass away, like I don't mind them having my passwords, but do you recommend that or no?
I mean, and again, I'm not a lawyer or like an estate specialist or anything like that, but I think have something is a lot better than having nothing. So a lot of clients I deal with, unfortunately, I do a lot of life insurance claims. So I'm the first point of contact when someone's spouse or parent passes away. And a lot of times they don't know where to start. And just knowing where your accounts are is huge, right? Mm-hmm. Just knowing that you bank with RBC, or maybe you have somebody at RBC that you know well, like whether it's an advisor or someone you deal with. Having that person's name somewhere is super helpful. So they don't have to call some 1-800 number at that point, right? Just like dealing with estate stuff is super stressful. Obviously, it's not a pleasant experience. So you want to make it as easy as possible for that person that has to handle those things at that point.
Mm-hmm. So someone has a question, beneficiary versus successor on the TFSA, which is better?
So if you have a spouse, like a serious common law partner, or you're married, you want to make them your successor holder for sure. So that is basically, like I said, it rolls over directly to them, and they can hold it within a TFSA still. And then your beneficiary would be, say, if it was your parents or a sibling or somebody. So it doesn't roll over in that same way, if that makes sense.
Kind of. So if you have a partner, common law partner, they're either one or the other, right? And you decide if they're your beneficiary or your successor.
You want to put them as your successor.
Oh, okay.
And then what you can do is set up a beneficiary in case something happened to the both of you. Like, let's say you were traveling, right?
So for people who are like, oh my gosh, I don't have that set up, how do they get that set up?
Super easy. Like, technically you can change your beneficiaries whenever, right? So say you work with an advisor, you might want to reach out to that person and say, hey, I want to update my beneficiaries. And it's just like a simple form that you would fill out at that point. Or if you deal with an online bank, there might be a form directly available once you log in. I think every institution does it differently, but it's fairly straightforward. You just need like their birthday, their name.
I've had a few institutions send me like little reminders, like fill in your beneficiary. Usually it's part of like the onboarding process, but I've definitely had an account where I've had that account for like 4 years. And then out of the blue, they sent me a reminder to fill out my beneficiary form. So I realized that account never even had a beneficiary in the first place. So definitely for people watching, check that your accounts have your beneficiaries set up or your successors. Because what happens, Dominique, if you don't have anything set up? What would happen with the money?
Yeah, so your money doesn't go in nowhere land if you don't have a beneficiary. The government doesn't get it. Sometimes people think the government gets all your money if there's no beneficiary. That's not the case. It just kind of gets stuck a little longer. So your estate might take some time to get settled, especially if you have a house. It might take a while to sell it, figure all that stuff out. So it'll just get lumped in with your house and your savings accounts and all these other things, and take longer to process. And then it'll get dispersed to whoever your immediate family members would be. So at that point, the government will basically decide who gets this money, and they have a way to find out who it should be allocated to. So say I was single and I'm 27 years old and I passed away and I didn't have a will or anything, it would just be split between my parents. And that's what would just automatically happen. But being that I don't have records, someone has to go, I guess I'll handle her estate, maybe my mom, and then she's busy and she's overwhelmed. So it could take a long time and just be kind of a really heavy thing that your family has to deal with, right? So they have to say, well, I don't know if she wanted to be buried or cremated, or I don't even know if she had life insurance at work. So they're just scrambling, trying to figure out if I had life insurance somewhere. That's why it's just really helpful to have that all, like I said, either at least on a piece of paper type of checklist, or that could also be on your will if you have a will.
Mm-hmm. Yeah, that's definitely something to think about. I only got a will after I got the house. I think that's kind of the recommended step. Like, not everybody needs a will. If you have like $5,000 in savings or $10,000, there's going to be like
you said, if you have $5,000 in savings, you have a student loan, and otherwise you don't have any other big assets or a very large loan, you don't need a will, right? If you want one, just to put instruction on, how you want to, if you want to be cremated or buried and you want that to be a bit more formalized, that's a personal call. But from a financial standpoint, I personally really think you should either wait till you're married or until you own a piece of real estate. But I'm not a lawyer.
So another great question. Yeah, keep them coming, guys. So later for will talk, but if there's no will, but there is this piece of paper with everything listed out, is this legal in records to sorting the estate? I should have brought my brother in. He actually deals with estate and stuff. I definitely can't speak on that, but I think a document.
Not legal, but it's helpful.
Yeah.
Right? Like, it's not going to help to settle your estate, but it'll help whoever's dealing with it to get pointed in the right direction. Because honestly, guys, like, a lot of people have life insurance, say at work, or they have a policy from a long time ago. And if no one knows it exists, it won't be claimed, right? Like, if you have you bought a life insurance policy 10 years ago and you don't have the policy anywhere, you didn't get it, or it's with your advisor and you don't talk to them, and then you pass away, how are your parents supposed to know that you have a life insurance policy if you never talked about it?
Yeah,
right?
I mean, Well, we'll move away from wills a little bit, but there's different ways to do it. Like I did mine online and it was super cheap. Maybe not, I shouldn't say cheap. It was probably like $120, which I think is pretty affordable. I looked
For
around
sure.
a lot of lawyers, it was like $500 to $1,000. And then as my life got more complicated, I'm like, you know what? I definitely need to have something in place. And
Hmm.
I did it through Willful. And it was really easy. It took like 20 minutes. And essentially you print it out, you get two separate people to sign it, and it's all legal and legit, and it just says like,
Hmm.
when I die, this is what I want to happen with my body, this is what I want to happen with my houses, this is what I want to happen with my assets. And then like hopefully it just makes it easier for my family. And then on that I stapled a document with like all my accounts and stuff and everything that like people need to know, because I'm a type A, like I don't know if you guys can tell, but I'm a planner. So I'm like, let me just make it easy for, I'm out of here. Like I'm usually the organizer in my family. So I need to make sure that it's all organized. And I think that
Hmm.
that's probably like the best thing you could do for your family, because like how are they going to find your password to your online banking, and like how are they going to know like to delete your Facebook account? I don't know, there's so many things that happen, so
Yeah.
trying to make it as easy as possible for everybody else.
Absolutely. Like I know we got our wills done just earlier last year, and I went with a lawyer. And like you said, there's so many options. It's just like opening an RSP. You can open one at the bank. You can open one with an advisor. You can open one online with an e-advisor or without an advisor. There's a lot of valid ways to do things.
Hmm.
So we did ours with a lawyer, and just because I wanted to be, honestly, I just wanted to be familiar with the process as well, just to actually know what kinds of questions are asked and how the whole process works. So that was actually one of the key reasons I got my wills done. So we had our wills and power of attorneys done just for the two of us. I think it came out to about $1,000 because the power of attorney is a good chunk of that as well,
Hmm.
and that we get to keep long term. So we made that jump since we got the second piece of real estate. I thought that was
For sure,
worthy of
for sure.
putting together.
Okay, so that's some good talks on wills, and thank you, Amarachi, for sharing that information. I'll send it in an email. My friend here just posted some more information. So let's move on to insurance. A lot of times, I'm still kind of confused about insurance. There's so much about insurance. Like, do I need it? Do I qualify? I'm self-employed. Like, let's just get into it.
Sure. So let's start with life insurance. So when it comes to life insurance, basically it's your beneficiary getting money when and if you pass away. So we're all going to pass away at some point, whether it's earlier than planned or when you're 100 years old. It's basically just a check that goes directly to your beneficiary. There's two types of life insurance. There's permanent life insurance, which usually is for funerals or just for like leaving an inheritance or something a little more long term, right? So say if I buy life insurance for 25,000, I can have that permanent and say that's to cover my funeral and whatever at that point in time, legal expenses, so on. Usually when people talk about life insurance, they talk about term life insurance. So that would be, say, for a 20-year period. Let's say I just got married or I'm going to start a family soon. I want 500,000 of life insurance for 20 years. And that's covering me in case I pass away during the 20-year period. So that's usually why people need life insurance, is over a short period of time. So say for a mortgage, say you just got married and you don't want to leave your significant other stranded financially. You want to make sure the mortgage is paid off. Or if you have kids, you need more life insurance just to make sure that they can carry on their life normally. They can have money for school. Somebody can take care of raising them, etc.
So what about a single person? I feel like most of my audience, and I don't know about your audience, but mine are all like single millennials. They're
Mm-hmm.
20, 24, 25, maybe still renting, that age group of people. Do they need insurance
So
or not yet?
that's a solid question. If I run into a lot of clients that are, say, 21 years old and they just want to start saving, right? You probably don't need, and I mean, I got to be careful saying stuff like that, but you probably don't need life insurance if you're 21 years old and just starting to save. It wouldn't hurt to have it if you really want it in place, right? But chances are you don't need it yet because you're still many, many years away from starting a family and settling down and getting pretty serious. Um, but if you're 25, 26, 27, and you're either getting serious with your partner or you're thinking of starting a family soon or you have a big mortgage, then it's probably the time to at least start that conversation about life insurance. Like I set mine up, I guess a year or two ago when we had our mortgage, and we were both self-employed. So I thought, well, if something happened to one of us, it's going to hurt our finances, because not only is one income gone, but I'm probably not going to go and, be yippity-doo with work the following day and just continue as if nothing happened. So that was our moment to get life insurance. But 5 years ago, I was 22 years old. I didn't have it, and I don't think I needed it. Right? If something would have happened to me at 22, and my parents had to pay for the funeral, that would have kind of been normal. I was still a student back then. I wouldn't feel that terrible about it. I wasn't a fully independent adult, if that makes sense.
But one of the good things I think of getting insurance when you're younger is that usually it's a little bit more affordable. Can you explain kind of how that process works?
Yeah, so the premiums are based on your age at that point of applying. So say I apply right now, I'm 27, and I get a 20-year policy. My premium, might be, I don't know, $20 a month for that 20-year period. And if I waited a few years, that premium might be $25 a month for that 20-year period. So it goes up, depending how long you wait to apply.
So there's going to be that sweet spot where you want to be young enough where you can get a good premium, but also old enough where it's going to be worth it. So,
yeah.
We're all in different stages.
Yeah, that sweet spot, I think, is like a few years before you anticipate really needing it. Like if it's in your 3-5 year window to start a family or to get settled down and get really serious. Because I've ran into some clients that waited, until their child was born, or until, they got married and something happened to their health. Honestly, it could be anything, some kind of diagnosis or an accident, and they didn't qualify for insurance anymore. And that's really at that point that they needed it. So, I don't want to be a bummer, but it's something that you want to put in place, but you don't need to put it in place when the day you turn 18, right?
So can you walk us through the process of how someone would qualify for insurance and then what they would need to do?
So to apply for insurance, honestly, the easiest way is just online. So I've been doing a few applications online right now with clients. Sorry. I just do them through Skype or through Zoom, and I share my screen and just walk them through the application. So usually you need a piece of ID, like your driver's license. You decide who your beneficiary is, the amount of insurance that you get, and then you answer a few basic medical questions. So you just, have you had cancer or heart attack before? When's the last time you went to your doctor? What's your family doctor's name? And then it asks a couple questions, sometimes about your weight and your height, a few basic. It takes about 20-30 minutes, depending on how extensive your health history is. And then it gets sent off to the underwriting team, who decides if they're going to insure you, basically. Sometimes it gets approved right away. Sometimes, if you had a health history, they might dig into things. They might ask your doctor a couple questions and then get back to you and say, okay, you're approved. Here's your contract.
So we did have a very specific question that someone sent in earlier. About they got denied because they had a disability. What would happen in a situation like that where you maybe have a pre-existing condition and you get denied?
So the insurance world is similar to a loan, right? So you guys probably know, if you don't qualify for a mortgage or a loan with one of the standard banks, you can find alternative lenders. So it's kind of like that in the insurance world. If I don't qualify for insurance with one of the main companies, say Manulife, Canada Life would be Sun Life. They're like the top 3 basically in the country. I can apply through an alternative company. They might be a little more expensive, and there might be a couple of exceptions in the coverage, but it is still very valid. One of those companies would be Canada Protection Plan. There's probably a whole list of them, but I don't work with them as much. But at that point, depending on the type of policy that you're approved for, you might want to really weigh out your options. It might not make sense for you to spend a lot of dollars on like an alternative insurance contract if it's not providing you the coverage that you need. So that's where getting professional advice really comes in. If you bought the policy, or if you're looking at the policy with an advisor, that person's really trustworthy, they'll show you the pros and cons of that policy. And, they might tell you, hey, I don't think this is the right call for you. You might want to just double down on saving more money for if something happened to you. or you might want to just find some more streams of income. And Liz is really good at that.
Yeah.
A way to self-insure is through, real estate. It takes a while, but
it does. That's kind of the route that I've been taking for a little bit. I'm like, okay, well, even right now, like people getting laid off, and I don't know what it is about me, but I just like never trust that anyone will take care of me. Like obviously I have some like deep-seated issues where I'm like, I need to make sure that I take care of myself. So I'm like, I need to have my own like insurance, like finances on the side in case, like, what if I don't get coverage, or like I don't qualify for any of these benefits being released right now. I don't get EI. I didn't lose all my income, so I don't get that $2,000 bonus that the government is
yeah, do you have to lose all your income?
Well, who knows? I'm still trying to figure that out.
That's what I saw, and I don't think that makes sense.
But so I'm like, good thing, like you always have to be prepared, guys. And that's why I love having this show right now, because I'm like, this is how you can get prepared, because you never know what's going to happen. And that includes getting sick and getting hit by a car and dying. Like, who knows when this is going to happen? So try to be as prepared as you can. We have a question here from Logan. You can always get one policy at a younger age, and then figure more if you needed. Sorry, I cannot read. Okay, so I think essentially he's saying you can get one policy and then upgrade it if you need it. Is that correct?
Yeah, that's actually solid advice. So I'll give you an example. Actually, I have the software in front of me. Say I'm just a single 27-year-old and I just want something in place for now. I'm not getting married anytime soon. So what I could do is set up, let me try and find something. I could set up a smaller policy, and I say small in terms of it might not be good if you want to raise a few children, but for $250,000 up until age 65, I'd be paying $22 a month. So that's not a substantial premium, and that covers me for basically my whole career. And if I get to a point where I start raising a family or I have a much higher need, I can add another policy on top of that. So I don't want to make things too complicated,
no,
but yeah, it does make, you can get like a cheaper policy in place now, and then later on add another extra amount of insurance for a different period of time.
That's also similar to wills. The way I did mine, I was worried because I'm like, oh, what if I have to change it down the line? But for Willful online, and I'm sure like with other wills, you can go in and change it. I think it's probably more expensive, obviously, if you do it with a lawyer. But through Willful, they let you do like free updates and stuff. So I was definitely being like slow. I needed an ice storm to like hold me in, to be like, you know what, today I'll do my will, because I had been putting it off the back burner for like 2 years. But hopefully this call tonight just like pushes people to, if anything, just make that list of your accounts, and maybe put the password, maybe don't. I don't know how secure your house is and how secure you feel, but do that minimum, and then maybe look into insurance, maybe look into getting your will. Those are all the next steps, because you're going to need all this stuff at some point.
Exactly. And yeah, I think in terms of when you need it, it's really for insurance is, when you start working full time and you start bringing in an income and you want to start planning for the future, that's usually when you want to start looking at those things, right? A lot of insurance, like we didn't talk about work benefits yet, but I know a lot of jobs out there don't offer benefits right now, and the world's kind of changing, but a lot of jobs still offer very valid benefits. I get a lot of clients that have government jobs or that work with bigger companies. They have long-term disability at work. They have life insurance at work. Those are very valid, and your employer is paying sometimes all or a large amount of that premium. So it's really key to understand your benefits. If you don't want to read through the 70 pages that are included with your work benefits, that's where talking to a financial professional really kicks in. Sometimes even if you have someone that's good at the bank or an advisor that you already work with for your TFSA or your RRSP, they can go through that with you and help you understand what's key in your group benefits and even find out what's missing, if that's applicable.
Okay, Logan has another question. Is it worth getting critical illness insurance with ROP or other types of insurance like disability?
Ooh, that's very specific. I like it. So ROP, I don't want to get too nitty gritty, but it's return of premium. So basically you get the insurance, and if you don't use it, like you don't actually make a claim, you get your money back. That's a very long-term return of premium. I like it, except, okay, so for some clients, I think return of premium is good. Those that have a really long-term horizon, and those I know will keep the policy long-term, basically until they retire. For those that are younger and just looking to put something in place just if, return of premium might not be the best option. So I do have some clients that are looking for a really long-term plan, and I can tell they're really serious and they have a little bit of extra cash flow. Yes, return of premium is good in their case.
Everything
you
about
basically get your money back if you don't use it.
Yeah, that's pretty sweet. Everything is so specific to individual situations, right? It's like
it really is, right? And that's where it's really hard giving advice publicly. But I find sometimes we don't get detailed enough, and people are just think it's kind of shady, right? People are like, well, how much does this even cost, right? That's why I like giving a concrete example. You don't have to go into a private call all the time to get more details on what this stuff means. And then for disability insurance, if you have a full-time income, I really recommend looking into long-term disability. That's probably one of the most key insurances, even more so than life insurance when you're like a young professional. It might be included at work, it might not be, and you really want specific advice with an advisor for that. It's not the kind of thing you just apply for online through those online carriers, because it has to really be customized for your type of work and what you actually need, because it can be kind of pricey if you don't get the right advice.
And that was disability, right?
Yeah, disability.
Okay, and then have we talked about critical illness yet?
Yeah, so I'll just explain what both are. So when we talk about insurance on a person, there's three insurances. There's your life insurance, so that's if you die. So we already covered that. Then there's disability, which replaces your income, so your monthly income. And there's critical illness, which if you get sick, you get a check, you get money upfront. So that's the two types of insurance you get basically if you survive. That's the ones that you are your own beneficiary. You don't really have to write that down in your documents because you're the one getting the money if something happens.
It's very timely. I don't want to be dark, but during the time of Corona, how would this have affected, people's jobs were affected? Like if someone got sick, I don't want to get into too many details because we don't have that much time left, but if someone had insurance and then got sick with whatever, and now we're off work, would that insurance now kick in?
So your long-term disability would. Usually there's 3 months to wait. That's where your emergency funds kick in, and I think that was covered in a different call. After 3 months of not working, that's when your long-term disability kicks in, and it basically replaces your income. So maybe you'll apply and you'll get $3,000 a month after tax. You get that all the way through until you can go back to work, whether it takes a year, 5 years, 10 years. So you can see how important that is, right? Most people just have EI and a little bit of savings. And then once you run out of that, you don't want to be just dependent on the government programs that are out there, right? For most people, that would really be a last resort. Long-term disability is really huge. I know most clients that are younger that come to see me and say, hey, I want to get long-term disability. My first thought is, wow, that's really mature to be looking into that. Almost 100% of the time, it's because one of their parents has claimed their long-term disability. And they realize like, wow, I don't have that. What if that happens to me? And it doesn't have to be like a car accident. Honestly, I think 30% of the time it's for mental illness, like anxiety or depression, that doesn't allow you to go back to work full time.
Yeah, that's super important. And people need to realize like all the different ways that your life could be affected that could affect your job. So, I mean, you mentioned emergency fund. So for sure, people, regardless of where they are in their life, need to have an emergency fund. And then something could kick in if you had insurance.
Exactly.
Okay.
And then critical illness insurance, just a quick little summary on that. I'm covered for $50,000 myself. So if I get cancer, stroke, a heart attack, or a list of other illnesses, I basically just get a check for $50,000. So instead of having to dip into my savings during that time while I get better, I could just use the money for literally my bills or for my spouse to take some time off work. Because if I got really sick and I was going through treatment, I would need Richard to drive me to the hospital back and forth and just to spend time with me. And he would have to take time off work in addition to me. That would cost us a lot of money, right? Just revenue that isn't there. It's one of those things you don't think about, but once you see it happening around you, 50% of us get cancer, and most of us are going to live through it, which is awesome, but that's going to have an impact on you financially and otherwise. So
right. Okay. I'm like, well, Absolutely. So we have about 5 minutes left. Any final questions, send them over to us, guys. But ultimately, where can people find you if they want to learn more, if they want to connect with you, if they maybe want to have a consultation with you?
So I'm really active on Instagram. It's just my full name, Dominique Chenard. It's a combination of a personal and a work account, but I just talk about finance the whole time on there. And I'm also on Facebook. I just post on my personal profile, essentially, again, just my full name, Dominique Chenard. Post a lot of financial content, and I have my booking links on both profiles. All my consultations are free just because I get paid on commissions, or that's just how my work is structured. So
Yeah,
if
and I
someone
love how
has questions,
transparent you are, because I feel like so many times I'm like so skeptical of people. I'm like, ugh, I don't know like how you're scamming me. But you have, ever since we met, you've always been really open about like, this is how I get paid. I want to help people. And like, obviously we all make money somehow. You guys know I get paid through all my different ways, but it's all about transparency.
absolutely.
Yeah.
Yeah, and you know what? I have had meetings with people where I outline you don't need life insurance. You should probably focus on your tax-free savings account before you focus on an RSP, or you focus on your tax-free savings before permanent life insurance a lot of times for people that are just starting out. Whereas some insurance agents would just kind of be like, oh, you want this? Here it is. Let's apply for it. So I like to look at the need first, and I think people really respect that. And if they don't need my services, then we just kind of shake it off and say thanks for the help, and they might know someone else that needs my help. So I found
Perfect.
just honesty is the best policy. And yeah. Oh, somebody has a question.
So if you have $1 million term policy that is renewable and convertible and want to eventually change it to a whole life policy, how is the rate determined, and would it still be $1 million or lower based on how? Oh wow, we have 4 minutes left. Can we answer it in 4
All
minutes?
right. Short answer, it's at your age at the point of conversion. So the longer you wait, the higher that premium will be, but it'll be a fixed premium when you convert it. So it doesn't hurt a lot to wait a year or two, but just don't wait till the very end.
Awesome. Yeah, maybe this person can connect with you later on. I'm like, I don't even know what that means.
Yeah.
Insurance
Very
is,
specific.
yeah. Insurance is definitely one of those topics to me that I'm still learning about, still confused. And this is another thing to remind you guys. Personal finances, there's a lot of topics under that umbrella. There's debt, there's investing, there's money management, there's money mindset, there's insurance. So don't feel overwhelmed. We're going to have different topics each day, and just focus on what you can handle for now. Maybe right now you're going to be focusing on just organizing your finances because you're at home. You have your paperwork in front of you. You can get a little folder and just get organized. And that could be like, that's all I'm doing this week, just organizing. But then do what you can.
Yeah, having that checklist is a great first step, and adding beneficiaries on your TFSA, on your RSP, and on your policies at work and your individual policies. And that's a great first step, honestly. And it's something that a lot of people don't do for a whole lifetime. I've met with 50-year-olds that have had like RSPs for a long time, and their spouse isn't set up on it. That's just horrifying, because I don't want to get into the taxation of RSPs, but you want your spouse as your beneficiary. Let's just say that.
Yeah, that's a good tip. And also, like, do it now when you're in a, I don't know if you're in a good headspace, but maybe you're in a good headspace, because later on when you have to do it and you're scrambling because something happened, you're not going to be in a good headspace to get your financial affairs in order. So do it now when you have time, and when it's just like, oh, let's just get this out of the way and get it over with.
It's so true. I mean, with the extra time at home, there's just a lot of things I've had a chance to catch up on. And to be fair, I've been working more than full time this whole time, but I just think being at home gives you some extra time to pay attention to little things like cleaning up or organizing records. I'm going to have to do my mileage log for 2019 soon. I don't know about you, Liz, but
yeah,
self-employed tax prep is a lot of fun.
Yeah. I know it's boring. Like, it's very boring stuff. I don't know a lot of people who like it, but just do it, get it done, and call it a day. So on that note, I think we'll just wrap up. Thank you guys so much for joining us on the call, and you can find more of us online. Dominique already said her stuff, and mine's at ambitiousadulting.com and ambitiousadulting on Instagram. Thank you for coming, and we'll see you on the next video.